So, of course, we have also seen South Korean export numbers plunging 11% again. So does this all just strengthen the case for more BOK rate cuts?
I think that's the case, and it's not just South Korea. It's pretty much a similar situation that faced by most Asian economies. That you're right now facing very much a double whammy. That global growth is very weak, and they are facing the collateral damage from the U.S. and China trade tensions. And domestically, the economic conditions are not really picking up fast enough to provide an offset to the external shock as well. So I think that's making a very strong case for Asian central banks to continue to ease policy, and clearly with the Fed now also officially engaging in policy easing, that's opening the door for more policy support as well.
Will we see more synchronization in monetary policy cycles between U.S. and Asia?
Absolutely, that's what we have seen historically. If you look at the policy cycles between Asia and the Fed, they have in general moved in tandem over the past 15 years or so. We have recently conducted research looking at the past decade, 3 policy easing cycles of the Fed, 98, 2001, and 2007. On average, the Fed eased policy by about 375 basis points, and Asia generally followed the same step, easing by slightly less, by about 225 basis points. So clearly there's a synchronization of the policy cycle, and that's why I said that the fact that policy is easing in the U.S. is opening the door for more monetary support in Asia.
Yeah, is that something you'd expect to see coming out of the PBOC as well? We had Chinese manufacturing PMIs a bit better than expected in July. I guess that's to be expected as the trade war deepens, but when are policymakers going to move?
I think China, obviously we're seeing slightly different way of easing monetary policy in China compared to other central banks. Monetary policy easing has been a lot more prudent and cautious this time around compared to past easing episode. But clearly, from the Politburo meeting that took place early this week, the signal is very clear that the direction of policy stance is towards a more proactive support for the overall economy. Having said that, I do think that the policy package going forward is going to tilt more towards fiscal support instead of monetary support, given that aggressive monetary policy easing is going to exacerbate some of the structural imbalances like debt and leverage problems and housing bubbles. So I think monetary policy easing is going to continue, but taking place in a more cautious and prudent manner.